Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Chris Dearborn, Managing Director with Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Chris, looks like stocks are a little bit volatile to kick off the week of February 22nd.
Absolutely. It's definitely a value versus growth story here. If you look at the different indices, Nasdaq Composite and the Nasdaq-100 have been leaders basically on the tech back. And when you have a little bit of differential moving in here, especially with bond yields rising, the tech story is really not as attractive at these multiples at the moment. And that's why you're seeing the NDX taking a little bit of a hit today on the back of that. You're seeing energy rising and some of the older value stocks getting that bid up this morning. That's why there's such a divergence between the NASDAQ and, say, the Dow Jones Industrial, which is positive on the day today. You know, we're down about 1.5%. But looking at the chart, when we go to it, you're going to see that it's really still a very bullish looking chart. We haven't broken that gap lower yet. And the NDX has a little bit room to run, but we need a little bit of consolidation here. So,
and let's take a look at your first chart here. What are some of the specific levels you're looking at today?
Very specifically, you had a gap lower opening this morning. And where we're looking at here is the February 1st high. That was 13,280. We're trading just above that now, about 13,320. And we really don't want to see the index touch that price point or close below it. That means that you're going to have a little bit of a rounding top here, and that will move it closer to support, which is the 50-day moving average at 13.086. So what you're looking at here is a gap down, kind of filling that little void where we gapped up on the first, and you don't want to see that filled. What that means is that the selling's coming to, starting to pick up, the buying's coming to a crescendo, and to verify that, you look at the relative strength index for the index, and that's standing at a 47. That's telling me that you're still in a serious sell condition. Remember, RSI measures buying and selling from 0 to 100. A measure of 30 is oversold. So we're not at that oversold condition yet. There's still room to the downside here. What we're looking at here is, again, that value versus growth trade. And the NASDAQ 100 is absolutely a value-based index for most of its members. So what you're looking at here is, hopefully, this will stop soon. If it doesn't, we're going to test that 50-day moving average. That should give it support. It has given the index support for the last 4 months, and that trend should continue. If it doesn't, then we're gonna have to reevaluate the chart and take another look at the index.
All right, and finally, for our last chart here, we're taking a look at the specific movers within the index.
You know, Tesla had some news out this morning and over the weekend that's leading us to the downside. That's chipping away at about almost 40 points, down over 6%. And then you get the other heavyweights, as usual, all to the downside, leading us lower: Apple, Microsoft, Amazon, all shaving off another 20 to 30 points. Between the top 4 stocks, you're losing 100 points on the index. On the positive side, you've got some good news in the travel industry with the reopenings hopefully moving forward, as well as content on viewing. So Comcast, Booking, Marriott, all doing very well today. All added, unfortunately, you know, they're all up anywhere from 3 to 5%, but the point total is only about 3 to 3.5% for each one of those winners. So the offset is definitely the larger weighted tech names are dragging the index down.
All right, Chris, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.